I want to bring in Kevin Green, senior markets correspondent, right away to help set up the action today. All right, it seems like, this is a continued push of momentum for the bulls, KG, and also a happy Monday, happy start to a new week. Let's talk about where things stand first before we get into the latest with regard to AMD and Nvidia, because it's not throwing cold water on this momentum. When I look at the number on the NASDAQ composite in particular, that above 21,000 now, and I know we're looking at NASDAQ 100 also, it's been churning higher. It reminds me of when we crossed those levels for the Dow many moons ago. I have a hat as evidence of that. What do you think about, how would you characterize where we stand? Is the ball still in the court of the bulls?
Yeah, definitely. I mean, as we kind of get back to all-time highs for the S&P 500, and as you talked about the NASDAQ making all-time highs here, the bulls still have the ball in their court until you really start seeing a crack within the technology sector, communication services. It seems like the trend continues to be to the upside. Now, I would not discount the fact that we do have some seasonal, volatility that we should be mindful of over the next 6 weeks or so, but the market is really trying to digest all of the information that's being provided here and giving a little bit more of an optimistic tone, given the fact that the Fed sounds like there's enough members here to really try to push a rate cut in September, and even some actually kind of hinting towards 3 rate cuts, which I think the market obviously has been bidding up the equity market just in general because of that optimism here. Now, for this week, it's going to be very interesting. We have the inflationary data that's going to be hitting the tape. We have CPI tomorrow, and we have PPI on Thursday here. If you're looking at the Cleveland Fed inflation now forecast, they're actually expecting headline inflation as well as core inflation to actually come in a little bit lower than the street's expectations, which if they are right, which they were right last month, that probably would be another boon for the equity market just in general. But if they're wrong and we do have a hot print, that's probably where you would see some aggressive selling in the market. So right now, if you're kind of looking at last week, Diane, market breadth was actually pretty decent. We had the headlines to really kind of move this market higher after that pullback that we saw about 2 weeks ago here, and we're just kind of waiting to see what's going to really happen with not only just the tariff policy, especially when it comes to China, that deadline is coming up, but also when it comes to the Fed cuts, which once again, it seems like from the commentary that we've seen over the last week or so, it seems like we are pretty much on the trajectory, at least having 25 basis points in September. I think the battle right now is between 50 basis points and 75 basis points for the remainder of this year.
Let's talk about the U.S.-China trade truce, right? As you mentioned, that is the deadline for that is coming up. The temporary truce expires tomorrow. The last time I checked Truth Social, because often that's where we find out information from the president before there's an official release. What's the market reaction if this truce expires without an extension?
There probably would be maybe some volatility that creeps into the market, especially companies that have international exposure to China. I think the thought process right now is that there will be some form of a truce. And I know we're going to talk about AMD and Nvidia, but this could actually be one of those olive branches where they do create a little bit more of an extension, maybe another 90-day extension. And the Trump administration kind of goes on the back and saying, look, we were able to kind of make some concessions when it comes to chips and really putting the onus back on AMD and Nvidia in order to pay those. But once again, not levying that type of expense on China directly probably once again gives a signal that we might see a pause. And I think the market's already pricing in for that. It makes it very hard for the White House and this administration to really try to execute a lot of these tariffs on China just because of the cost pressures as well as the supply and logistic lines that are out there, especially when you're looking at rare earth metals. Obviously, that's still been a very big focus area, but also when you're kind of looking at textiles and other consumer goods, they do not want to be the reason that inflation really does come back very aggressively, even though you can make the case that maybe inflation will probably edge up higher because of these tariffs that we've seen on a global scale here. So it seems the signals from the White House so far, just by their actions, kind of signifies the fact that they might be looking at a pause and looking at maybe an extension of 90 days. And any type of reversal of that pattern here over the next 24 hours probably would put a little bit more pressure on the equity markets as a whole.
KG, let me ask you, how does that, the NVIDIA-AMD and the reports that we're seeing, how does that chip deal kind of intersect with this tariff negotiation process? Is this like seen as a bargaining chip? Is this some kind of leverage in some way?
Yeah, it's definitely a bargaining chip. I mean, if you kind of look at it, the administration's kind of changing its tone when it comes to these chips. At first, it was this national security issue, and now, if you pay 15% of the revenues from China, it's not a national security issue. That's what makes this a little bit more unprecedented here because of this abrupt change, and as well as the direct involvement, overt direct involvement when it comes to private enterprise, which is something that's a little bit unique. So if you kind of look at this type of strategy, you could also say that this is an implied tariff because Nvidia and AMD most likely will probably pass on that cost to their China counterparts in one way, shape, or form when it comes to prices, just like we would see for a normal tariff. It's just that the messaging is more towards do you guys want really, do you want to export license or not? And if so, you got to pay up for it. And so it's definitely a bargaining chip, but it seems like they're trying to dampen down some of the rhetoric as well as tone down some of the actions from the administration to show an olive branch. And you can say that China has ramped up rare earth exports as well. We have seen some import-export data that does kind of reflect that. So it seems like China, from a headline standpoint, from what we know, looks like they're trying to hold up their end of the bargain here. And I think the United States is trying to figure out a way where they're able to adjust to be able to accommodate China, but also still try to gain revenue from these chip sales, which it seems like that's really the crux of the matter when it comes to this issue.
Okay, and let's talk a little bit about some other international headlines we've been paying attention to. The latest between Ukraine and Russia. President Trump expected to sit down with Russia President Vladimir Putin by the end of this week to possibly broker a peace deal. What market impact are you anticipating from this, KG?
Not so much an equity market impact. You're kind of looking more at the commodity space, especially when you're looking at natural gas and crude oil. We did see a little bit of a fade for crude oil going below that $65 level. We actually did see some pressure overnight, but it is starting to come back here a little bit. What would be interesting for this deal, Diane, is if Ukraine actually has a seat at the table. There was this mention of swapping territories, but there's also some news reports that maybe the interpretation of whatever this deal could have been as far as Russia withdrawing from certain locations and Ukraine ceding some of its territory here may not completely align with what Ukraine would like as far as their what they would like to see for a deal. And it seems like Vladimir Zelensky has been kind of discussing that, as well as European partners, because this also does have a European impact here. So we will obviously see this on Friday. Let's see what this deal is going to manifest itself into. And once again, I mean, Ukraine and Europe are really going to have to really sign off on this deal. The United States can do as much as they possibly can to put pressure on both sides here. But the true risk is going to be Europe. So I would look at the commodity space more than the equity space right now when it comes to this deal potentially hitting. And if we do get some form of a deal here, look at some concessions from Russian sanctions as well, which obviously could push oil prices a little bit lower here. That also could have put into jeopardy the nuclear trade or the uranium trade, let's say that. Because Russia has effectively stopped exporting uranium to the United States. There's some export licenses that have been given, but that could also be another market that gets impacted.
Okay, and then really quickly, let's get your levels on the S&P 500 to the upside and the downside that you're watching for today.
Yeah, to the upside, 64.30. To the downside, 63.50. We have VIX up, stocks up this morning, so keep your eye out on that. That's something that usually does not happen about 80% of the time where there's an inverse relationship. So that's an interesting development to start off the week.
All right, thank you, KG. That's our Kevin Green, Senior Markets Correspondent here on Schwab Network.